Welcome, everybody. This is John Gallagher with Let's Talk Concrete. So we're here with Tyler Grissom, and we're going to.
So, John, we're going to unpack some of the Q1 data, then what's gone on year to date, and what's kind of the outlook now that we have a quarter underneath our belt. So we got our first set of data coming in through Q1. We got data from the PCA. We got data from the USGS. We've also got data from our on-field resources that we use to look at the global cement as a corporation as well, along with all of the other census and bureau level, all the permit data and all that kind of stuff as well. But 2025 has gotten off to a very rocky start, very rough. January cement consumption was down. It's officially down over 2%, about 2.5%, somewhere in there. And then February is also down is estimated to be down about 20% in the US and in Canada. So all across North America. That's really driven by the change in weather patterns, would be the first thing. 2024 was a very mild February, where 2025 was what we would call a normal winter to very cold, to cold to normal. Something we haven't had in 4 or 5 years, but February is traditionally the coldest month of the year. And we definitely lost several pouring days. And when you start to couple that with some of the policy changes and destabilizing issues we've had in 2025, and it started to erode confidence. The big one being rate cuts. The market expected 3 rate cuts in 2025. That's been revised down. We didn't get a rate cut in Q1. Everybody knows that. We didn't get a rate cut in the US. We didn't get a rate cut in Canada. That's really destabilized or frozen the residential market. And so we've lost that floor. Now we've revised that forecast from 3 down to 1. Single family starts has dropped about 5%. The permits have dropped 5%. And multifamily is down about 7%. The housing permits in Canada are down about 6%. So that floor for housing has dropped to a level lower than we expected it to be. We're seeing something similar on the infrastructure side as well. That was the other buoy holding up 2025. But the bottleneck in funding has paused a lot of the projects, infrastructure projects across North America, specifically in the US. But there has been some posturing changes in trends. A lot of the state DOTs are starting to notify or bring to notice that they're going to continue on with projects, even though there is potentially funding gaps. And the federal DOTs start to come out as well, and I think they're starting to believe that funding is going to come, even though it's not here now, and looking to get some good media out there. On the tariff side, we start talking about instability there. We had our tariffs roll on. They actually rolled off yesterday. So they're going to pause them for 90 days on everybody but China. But that does not include the 25% that was put on Canada and Mexico. So it's estimated that this is likely to increase prices about 3 to 10%. When we're already forecasted to see a 5% price increase here in the United States. So price increases definitely are going to be a thing here in the United States this year. We import about 20 million metric tons of cement. Increase prices, it's going to give cover for the domestic producers to increase prices as well. We've already seen and we've already heard of a note from a producer importer that they're going to increase their cement prices about 8% starting June 1st. But definitely as a business and sales rep out in the field, we got to be aware of this, start having those conversations with our customers, how they're handling price increase at the inland plants, inland markets as well, not just the coastal markets, but what price increases are there. As we disrupt supply chains, as we saw in 2020 or 2019 and 2020, there's the potential for outages as we shift these supply chains. If we're traditionally getting cement from Vietnam on the West Coast, which has a 55 day lead time. If we shift that to somewhere that's got a 63 or 68 day lead time coming into the West Coast, that could definitely impact supplies and availability. Same risk applies to the East Coast and the Gulf Coast as we start to shift these basins and as these cement market starts to move around. So have that conversation. It's not always going to be remove cement. We've got to also be aware of workability and placement and constructability of concrete. So we got to lean into different solutions of that as well.